Hey everyone, welcome back to Corporate Decoder. Today, Antares Private Credit Fund, APCF, just filed a current report highlighting their latest distribution and portfolio update, and I'm seeing a few key numbers that investors need to see. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is paying out a decent dividend this month, but the real story is in their net asset value and how much they have issued to investors. Alright, let's dive into what Antares Private Credit Fund, APCF, has shared with us. They have released a current report, essentially an update on important company events. First up, they've announced a regular distribution for those holding their common shares of beneficial interest, which they simply call shares. They are paying out $0.1818 per S-share. This is for shareholders who are on record as of the 30th of April 2026, and the money should arrive around May 29. This distribution can either be in cash, or if you are part of their reinvestment plan, it will be used to buy more shares of the fund. This is fairly standard for funds like this. Now, for the part that really paints a picture of the fund's health, they've given us an update on their net asset value, or NAV per share. As of the 31st of March 2026, which is very recent, the Class I common shares, which are the only type of shares they have outstanding, had a NAV of $24.57 per S-share. This is the value of the underlying assets of the fund minus its liabilities divided by the number of shares. The total value of the company's assets, its aggregate NAV, was about $795.6 million. That is a big number. But here is where it gets interesting. They have loan commitments of roughly $2,056.4 million. That is more than double their net asset value. They also have debt outstanding, which is principal debt, of about $968.1 million. This means their debt to equity ratio, or in this case, debt to NAV ratio, is around 1.22 times. Simply put, they owe a little more than the value of their net assets. They also track a net leverage ratio, which is basically their debt minus their easily converted assets like cash divided by their NAV. This comes in at about 1.13 times. This also shows they are carrying a significant amount of debt relative to their equity. For a credit fund, leverage is expected, but it is always good to keep an eye on how much debt they are using. Now let's look at how they are raising money. The company is currently in an ongoing offering to sell up to $2.0 billion in shares. They plan to keep selling shares every month, usually at a price that is pretty close to their net asset value per S-share. This is a common way for these types of funds to grow. They've provided a table showing the shares issued and the money raised through the 1st of April 2026 subscription date. This table does not include shares bought through their dividend reinvestment plan. They've issued 324155542 Class I shares, bringing in a total of $811,793,532. So far, they've raised over $811 million in this offering. This is a substantial amount of capital. This means the fund has successfully attracted a lot of investor money, pushing towards their $2 billion offering goal. Looking at these numbers, Antares Private Credit Fund, APCF, seems to be actively managing its portfolio and capital. The distribution is a positive sign for income-focused investors, and the significant capital raised in their offering shows continued investor confidence. However, the leverage numbers, while typical for a credit fund, are worth monitoring. They are essentially using borrowed money to magnify returns, which can also magnify losses if things go south. The net asset value per share at $24.57 provides a baseline value for the fund's investments. The risk I am watching is how they manage their leverage in potentially changing economic conditions. What I am actually looking for is continued stable NAV growth alongside their distribution payments. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.